Absolutely insane price action on EURUSD yesterday, where we saw a massive impulse in towards the highs, where price finally stalled at the yearly and free monthly open, finding rejection and now seeing a short-term overall pullback. Now, guys, what are we looking for EURUSD and the major dollar pairs, and of course gold? Now, first of all, EURUSD in itself is and still remains bullish. As to our overall analysis per recent weeks, as we can see, this here was the overall strong impulse up. We had the pullback phase down, taking out all liquidity. And ever since we took out that liquidity low, we've seen an internal market structure shift where we had a push down, pull back, push down. And then this here was the internal market structure shift, causing price action to shift bullish, meaning that we have a swing low, swing high, and then the internal low and the internal high. That is then the overall, let's say, internal market structure now that we're seeing here. So that means that the current low is this low, the current high is this high. Then, what do we need next in order to look for a long position? We need liquidity. Where do we have liquidity? We have internal liquidity resting here, and we have liquidity resting here. These are the main two overall, let's say, pullbacks in the overall push that we had in towards the upside. Now, what I'm looking at is after seeing markets retrace into 0.5 fib, taking out 2 points of liquidity, and the internal now aligning with the overall bullish swing structure, I'm obviously looking for potential long position from the overall sell down before the strong buy up. Now, within this area of demand, that is what I will be looking for the new potential long to take on EURUSD. Going into the 4-hour time frame, the only thing I do not like is that there's no clear points of liquidity within that overall push up. Only, let's say, pretty much this overall low here. So let's see how the market reacts inside of that daily demand zone. Can the market just tap and then shoot back up? Yes, it doesn't always need to create liquidity, because what could the market do? Tap into daily demand, shoot up, and then this will be a future overall liquidity low, for example, from where we can then look for long. So it's pretty much up to you how you want to be looking at this overall setup. Obviously, we can take this setup pretty much from a just simple demand perspective, stop loss underneath the overall lows, and then we target around 1.19, which is the overall high. Or you wait for market structure, let's say, to start shifting, where we see maybe some kind of internal, let's say, pullback, and then we see the market structure shift up, demand is then formed, and then you, for example, take a long position on top of that demand zone, stop loss underneath the lows, and then you, for example, target the overall highs. That is also a possibility. But across the board, the overall fundamentals on the dollar are not, let's say, favoring any dollar strength, meaning that EURUSD can still push up higher. Obviously, with the current situation with Greenland that we've been seeing and the overall uncertainty, we're currently seeing EURUSD push up higher, the euro gain more strength against the dollar. So let's keep an eye on this area of demand and see how price reacts from there. But ultimately, we're looking for potential longs from that demand zone. Going into the dollar index did sell off in towards the downside from the overall, let's say, liquidity high that was resting over here. Now, what we've seen is that market structure was bullish in towards the highs. We had an internal trend break up, and then here we had a breakdown again, meaning that this was the swing high, this was the swing low, internal liquidity high grabbed, and this is then overall, let's say, your impulse down. And now we can expect another potential impulse down. Price has obviously been stalling here at the yearly and the free monthly open, but ultimately we would expect this to, at some point in time, break and continue pushing down lower. Although I'm, again, must say that the dollar index is relatively consolidative and not my overall, let's say, favorite pair to trade at the moment, as my focus is mainly towards gold and the yen pairs, as my bias there is a lot more clear and the volatility is a little bit more straightforward. Going into GBP USD did end up respecting the overall high that we discussed yesterday, making sure that we didn't get stopped out. So the market has brought price back to around our break-even level. If I just clean up this chart here, the overall price action on GU, and this is what I mean, like yen pairs are maybe a little bit more clean at the moment, but we're seeing very consolidated price action here. Yes, we are moving lower, but not with a lot of momentum. We had a breakdown, swing high, swing low. We took out the internal liquidity high that I talked about yesterday, and now you want GU to break this little internal demand zone. If that breaks, then yes, we can definitely head down lower again, regardless of what I just said on the dollar. And it might be confusing that I'm talking about, hey, potential EURUSD longs, but still GU shorts. But the price action is just very contradicting on these two pairs. So then it's up to you potentially to choose a bias. What you can obviously do is split the positions between different accounts. There are different risk management strategies that you can apply when the market pretty much moves like this. But overall, GU does still look good to head down lower, where it takes out this internal liquidity high, swing low, obviously with the daily breaker structure. And now we've seen daily change of character down, and we have somewhat of a supply zone here. And again, if you look at the 4-hour time frame, market structure still remains bearish. Still, though, I have taken my position to half risk, so I pretty much got in over here with initially my stop loss here above the highs, but I have now mitigated the risk by putting the stop loss here, putting it to pretty much just 0.5% risk. So yeah, we're now at break even. If it goes, it goes. If it doesn't go, then perfectly fine. Then what I'll do is I'll get in obviously on that Euro USD long, and then I'll be looking to short GU maybe in the future again from this higher supply zone once we get that bearish confirmation indeed from that specific level. AUD USD and NZD USD. So AUD USD has continued pushing up higher. I was waiting for somewhat of a little bit more of a retracement yesterday. Haven't seen it yet. Liquidity is building up, so this is perfectly fine. Don't have any FOMO. What you now just want to wait for is obviously with market structure now being bullish and us having, let's say, here the first impulsive phase, here the second impulsive phase. The second impulsive phase is still ongoing, so we still would expect overall a retracement to happen somewhere in the near future, which is then an orange zone. And then when that orange zone happens, then we'll look for the next potential long opportunity from either this liquidity point, over here, this first one, or this second one. So yeah, looking for longs on AUD USD still. Then going into NU still needs to make a retracement in towards daily demand, and then from there we can look for a potential long opportunity. NU is still looking good to push up higher on the daily time frame, especially. I like what we're seeing here. Daily demand is now being created together with the yearly open here, and looking at the 4-hour time frame, we're just building up some more liquidity now underneath this low here. So let's just see what price does. Needs to redevelop. Obviously, you cannot get into longs here. I'm definitely not looking to take a short here. So I'm just kind of like waiting for the market to provide us with a setup, and that would potentially be the retracement, and then look for some longs in the near future. Then moving on into the USD pairs. So we have USD CAD, USD yen, USD Swiss, and then of course gold. USD CAD, for me, a little bit too uncertain at the moment, though I am favoring some more downside. I'll be monitoring this overall buy up for the sell down as an area of supply from where we can look for some more potential short positions. Other than that, that's pretty much it. Break up, and then we had a break down again, and then we had internal liquidity resting here, internal liquidity resting here. First point of liquidity has now been taken, daily change of character, hence why I would focus more on looking for some more potential downside. Also just because we have such clear liquidity lows open still here, I would only really be looking for longs if we can get another clear market structure shift up again. And then we can start looking to take out these descending highs. Other than that, the current focus does lie on shorts for now. USD CHF, short focus as well. We can see that we had a strong sell-off again yesterday. Now we've started to see the market retrace a bit. I'll continue to look for short positions on this pair. Obviously, I still expect the Swiss franc to be slightly stronger than the dollar due to uncertainty, and any comments today, especially with the speech of Trump coming, should potentially push USD Swiss down lower. If Trump does say anything about invading Greenland, then USD CHF will definitely push down lower again. Probably not going to see that high of a retracement if he does say something negative or let's say contradictive. So keep an eye on this yearly open here, because we could already start selling off from here and then use this potentially as kind of like a liquidity high to cause that next sell off. Then USD JPY, the Japanese yen remains relatively weak. However, as I mentioned in yesterday's video as well, USD JPY is not my main focus because the yen is not strong. So I don't want to get in on sells, and the dollar is not strong as well. So you're trading two weak pairs against each other. You want to be focusing on a pair that is strong and a pair that is weak, such as, for example, let's say Euro USD or gold, for example. So that's why when the dollar is, for example, very weak and gold then is inherently strong because of uncertainty, gold starts pushing up higher. But USD JPY is just not my main focus at the moment. I don't like where we're positioned. We're consolidating. So staying away from this for now. Prefer some more downside for now before looking to really reposition myself into any new longs. I am still longer term bullish on USD JPY, but just not from current level. And then, of course, we have gold. Gold in itself continues to push up higher. Last night, again, in a massive, massive push. And even this morning, we've continued to push up higher. I've been able to request a payout thanks to gold again. Some very good payouts. I actually bought on Sunday market open. I just decided to place a buy limit or a buy market execution in itself. And I've been holding on to that position ever since. Yeah, and now requested a payout, posted that payout on Instagram and inside Discord. But ultimately, guys, I understand you want to get in on gold. What can we say? If we look at the weekly time frame on gold, right, and let's say we focus since around the summer, we've only seen a maximum of, let's say, 2 bearish weeks in a row. And even after seeing, let's say, a bearish candlestick, the maximum drop is like 5%. After that, every single time you get a bearish candlestick, the week after is pretty much bullish. Here, here. So whenever we get a weekly bearish candle close, it might be a good idea just to look for another buy opportunity. Obviously, at some point in time, there is going to be a massive flush, but as long as this kind of like situation with Greenland goes on, you just want to be positioned in gold longs continuously, because it's ultimately a very easy way to pass challenges. Easy. So any flush that you get of liquidity, for example, over here, or any weekly candlestick that is bearish, as we had over here, pretty much you can expect the next week the market will push up higher, right? Even as we saw over here, obviously there's going to be moments where maybe it works a little bit less well, but ultimately on the long term for the past year, it has been yielding incredible results if you just focus on buying only and not getting into any short positions to kind of like be smarter than the market. So just focus on longs, and any potential liquidation is again another buying opportunity. So let's wait for a, let's say, bearish candlestick, for a pullback, and then we can get into some new buys, yeah? So that's it for today, guys. Thanks so much for tuning in. Wish you a fantastic trading day. Any questions, let me know, and thanks.